I understand. A few minutes ago, I mentioned that form 5498, and on it there's a box that says, here was your balance as of December 31st. So what you're saying is that we make a manual correction to that.
Yeah.
Right? And you have experience as a custodian.
That is such an important point, because IRA custodians are required to send an RMD statement by January 31st of the year for which the RMD is due, right? Now, the RMD statement will include the fair market value as well as your fair market value statement.
And they'll check box 11 because you have an RMD.
You have an RMD due for the year. But when the IRA custodian calculates your RMD, they're going to take a snapshot of your account as they have it. So they're going to look at your fair market value. They're going to figure out your life expectancy, and you're going to do the calculation. They won't do the adjustments for the outstanding rollovers, the outstanding recharacterization, outstanding transfers, because the IRS says they don't have to worry about that, which means the RMD calculation could be wrong. So what I recommend for tax professionals is when you're doing the RMD calculations for your client, create a sheet and include all the amounts that you need to adjust the fair market value by. So you ask your client, did you take a distribution last year that you rolled over this year? Did you convert an amount last year that you recharacterized this year? Did you start a transfer that you initiated in December that didn't complete until January? Because if the answer is yes to any one of those things, then you have to manually add those amounts to the fair market value and redo the RMD calculation. Otherwise, you're going to have an RMD shortfall.
In addition to that, Mike, we if we paid a little bit too much over to our QLAC, right? We exceeded the 25% or 125,000 limit. If there was an excess, we'd have to add that back in as well.
Right. And excess transfers would be the same?
Same way.
Yeah. Denise, you kind of intrigued me about